James, welcome to Real Vision.
Thanks, Ash. Good to see you.
It's a pleasure to have you. Before we get started, tell us a little bit about your background and about your journey into the investing space and also into crypto.
Oh, gosh. Well, I started my career as a community activist, a place called DoSomething.org. It's employee number 11 there, where I cut my teeth with a woman, a CEO named Nancy Lublin. We were getting teens and tweens excited about causes that they cared about. And I really started there doing community activism. And then I went late to Columbia Business School, where you're sitting in this big conference room and Bill Ackman comes in and gives his whole talk about shareholder activism and how he gets people, shareholders, excited about causes that they care about. And it just clicked for me. It said, that's what I want to do. I need to do that. I need to get shareholders excited about causes that they care about, and not always be an activist, but be an advocate for causes that we believe are really important when management does listen and sometimes doesn't listen.
Yeah.
But that's been the journey.
And tell us about your journey into crypto. How did you discover crypto? What got you interested in it? And what made you think that this was something that you really wanted to spend some time in?
As we're historically not a crypto focused investment firm or family office in this instance. We do special situations. So we're not activist only. We focus on special sits. But interesting developments happened in crypto that made it really interesting from a special situation standpoint. So for one, with the advent of LedgerX and seeing the options exchanges that were coming up off of LedgerX, not necessarily, let's say, like Deribit, but LedgerX in particular, seeing the options activity there, and there were certain mispricings that were happening because the CFTC and the regulatory environment just made really interesting opportunities. Not to get in the weeds, but for us, what was really enlightening to us was seeing that the CFTC doesn't allow you to trade on margin, specifically for these options exchanges. And then so seeing that you have to be fully collateralized on a call creates huge options mispricings on calls that we felt that we would like to take the other side of that trade. So that was really our journey to begin with. And then as we continued, we heard more and more from other market participants about Grayscale and that there were lending desks out there where we could borrow cryptocurrency. And so that was really how we started a small cryptocurrency practice or sleeve of our investments.
Yeah. Before we get into Grayscale, tell us a little bit about Marlton. For people who may not know, tell us a little bit about the structure and the nature of family offices.
I think there's a lot that's been written about family offices that is both accurate and inaccurate. There you have Archegos, and then you've got a handful of others. Think Archegos because it's in the news right now. Really, we categorize ourselves as a family office because it's wholly owned by myself and my family. Me being the patriarch of the family. We're the largest investor in the fund. And we finance ourselves in various different ways. So we use debt, we use outside capital through LPs, we do and accept mezz debt. There's a handful of different ways that we finance ourselves, but we're not a traditional hedge fund or investment fund that would be productized. So we don't say we run a long short fund to capture a long short value spread, and then we sell that product to institutions and investors. We don't do that. We're completely opportunistic. We have an open mandate, and that's the benefit of being a family office. We can invest in hedge funds, we can invest in crypto, we can invest in debt, we can invest in equity. Really, the world is our oyster.
So before we get into GBTC, first, two very quick bits of disclosure for me. First, I worked for Barry Silbert when I was at CoinDesk as a reporter. And second, I own a very small position in GBTC myself. I've long thought that it's a challenging question for reporters in this space in particular, whether you own or do not own Bitcoin. The challenge is, particularly with things like Ethereum, it's very difficult difficult to cover these things accurately if you don't physically possess some of the coins, so you can experiment with them, use them, actually see and understand how they work. For those who may not know, what is GBTC?
Well, I'm glad to hear that you're an investor, and hopefully we can do something accretive to help with the discount. But
James, my position is so small, it's not going to change my life either way.
You
But
know,
I really do follow it because it is obviously something that was a very prominent way, particularly historically, for people to own Bitcoin.
Yeah, Ash, not to interrupt, and I will come back to what Grayscale is, but I think that this is important not just for you and I in our conversation, but for everybody else that's listening. No position is too small. Okay, I think that that is really important for everybody to hear. If you are a shareholder, if you own one share, that's trading at roughly $25. If you're talking about minimum wage being 8.25, 7.25, you're talking about 3, 4, maybe in some states 5 hours worth of work to buy a share. So we think, I feel very strongly about this. It doesn't matter if you own one share or 300,000 shares. Every investor is very important. So that out of the way, off my soapbox here.
Very well said, James. Very well said.
Talking about Grayscale, you specifically what is Grayscale? So Grayscale, not to put words in their mouth, but I think of them as really becoming more of the BlackRock of the crypto space. They offer many different avenues for investors to get access to cryptocurrencies. Everything from your mainstream cryptocurrency of Bitcoin all the way down to some very esoteric altcoins that they're now creating trusts for. They sit there and they sponsor these trusts, and these trusts are structured as closed-end funds. What that means, unlike a mutual fund, is money comes in and money cannot come out. So when you invest in a mutual fund, you have a redemption program through a mutual fund. Just by structure, they're open-ended funds. So when you invest in a mutual fund, if you want your money out, you tell the mutual fund, I want my money out, and the mutual fund will give you your money out at net asset value. So separate to that, with Grayscale, you are buying shares that have a market value, that track an underlying net asset value. And you're going to have a disconnect between what the market value of the security is versus the net asset value, because there is no redemption mechanism. And it's the job of the trust sponsor to act with integrity and in good faith to keep the net asset value and the market value as closely aligned as they possibly can. That is literally their job, is to keep that closely matched together.
Talk a little bit about the fee structure and how closed-ended funds are actually accretive to the sponsor of the fund.
Sure. So in a closed-end fund, you take your fee off of the net asset value versus the market, and there's a difference in a market value, right? So in the sense of the Grayscale Bitcoin Investment Trust, you would have, let's say, a net asset value of $30 billion. You take 2% of the 30 billion, you might be trading at a discount. Let's say the net asset value is 30 billion. You're trading, for argument's sake, you're trading at half, so you're at 15 billion in market value. You're taking the fee on 30 billion. You're not taking the fee on 15. So the 2% goes off of NAV, not of market value.
Right.
So if the market value is trading down, your fee, your effective fee, is significantly higher than 2%.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.